When you start a new job or need to adjust your tax withholding, one of the first documents your employer hands you is the W-4 form. For many people, this form is confusing and intimidating, and it's easy to see why. The IRS redesigned the W-4 in 2020, eliminating the old system of allowances and replacing it with a more precise method based on income, dependents, and adjustments. This new system is meant to make your withholdings more accurate, but it can also feel complicated at first glance. The good news is that you can fill out the new W-4 quickly and confidently if you understand what each section means and how it applies to your situation. Taking just 5 minutes to complete the form properly can save you from two of the biggest tax frustrations: owing money you didn't expect or overpaying all year and giving the government an interest-free loan. Let's walk through the process step by step, explain why each part matters, and use real examples so you know exactly what to do. The first part of the W-4 asks for basic personal information: your name, address, social security number, and filing status. This section, simple, but your filing status plays a big role in how much tax is withheld. If you are single, you will have a different withholding amount than someone married filing jointly, and choosing the wrong status can cause a significant error. For instance, if you mistakenly check married filing jointly when you are single, your employer will withhold less tax from your paycheck because married couples generally pay lower rates. This could lead to a big tax bill in April because your actual tax liability will be higher than the amount withheld during the year. The second section of the W-4 is where things get interesting. It addresses multiple jobs and working spouses. This is one of the most common sources of mistakes because the withholding tables assume that the job listed is your only source of income. If you or your spouse have another job, the combined income will push you into a higher tax bracket, but the withholding from each job alone may not account for that. The form gives you 3 options to handle this. You can use the IRS online withholding estimator, follow the worksheet included with the form, or check a box if there are only 2 jobs and the pay is similar. Imagine you have a full-time job that pays $50,000 and a part-time job that pays $15,000. If you only complete the W-4 for your full-time job and skip this section, your employer will withhold taxes as if you only make $50,000. That means you will pay too little tax throughout the year and may end up owing hundreds or even thousands when you file. By entering both jobs into the estimator or following the worksheet, your withholding will reflect your actual tax liability, saving you from that unpleasant surprise. Next comes the section for dependents, which is where you can reduce your withholding if you qualify for tax credits. For the 2025 tax year, the child tax credit remains $2,000 for each qualifying child under 17, and there is a $500 credit for other dependents subject to income limits. If you have children, this is the step that can make a big difference in your paycheck. For example, if you're married, filing jointly, earn $80,000 as a household, and have 2 children under 17, you qualify for $4,000 in credits. You enter that amount on your W-4, and the IRS calculator will factor that into your withholding, so you pay less tax each pay period. If you skip this step, your employer will withhold more tax than necessary, and you'll likely end up with a large refund. While some people like big refunds, it means you gave the government your money all year without earning any interest on it. The next section is for other adjustments, which is optional but extremely useful if you have additional income or deductions. This is where you can tell your employer about other taxable income you expect to receive, such as freelance work, dividends, or rental income, so they can withhold extra tax to cover it. Let's say you have a side hustle that brings in $5,000 for the year. If you are in the 22% tax bracket, you can expect to owe about $1,100 in tax on that income. By entering $5,000 in this section, your employer will increase your withholding slightly each pay period, which means you won't owe that $1,100 in April. This section also allows you to reduce withholding if you expect to claim itemized deductions that exceed the standard deduction. For example, if you're married, filing jointly, and your mortgage interest and charitable contributions add up to $30,000, you can reduce your taxable income by more than the standard deduction of $29,200 for 2025. Which means you might owe less tax than the default calculation assumes. Finally, you can ask your employer to withhold an additional flat amount from each paycheck if you want an extra cushion or like getting a refund. Some people add $50 or $100 per paycheck as a safety net, especially if their income fluctuates. Once you've completed these steps, all that remains is to sign and date the form. Without your signature, your employer cannot process it, so don't forget this final step. To see how this works in practice, consider Sarah, a 32-year-old single professional who earns $55,000 a year from her job and expects $5,000 from her photography side hustle. Sarah fills out her W-4 by selecting single as her filing status. She has only one job, so she skips the multiple jobs section. She has no dependents, so she leaves that blank. In the adjustment section, she enters $5,000 of other income to account for her side hustle. Since she takes the standard deduction, she leaves the deduction line empty. She does not request any extra withholding because the adjustment for her side hustle is enough. By doing this, Sarah ensures that an additional $1,100 is withheld during the year to cover the tax on her extra income, preventing a big bill at tax time. Now consider David and Lisa, a married couple with 2 kids under 17. David earns $60,000 a year and Lisa earns $50,000. They check married filing jointly and use the checkbox for 2 jobs since their incomes are similar. They enter $4,000 on the dependents line because they qualify for the child tax credit for both children. They have no other income, so they leave the adjustments blank. And they take the standard deduction, so they don't make any changes for itemized deductions. They also don't add extra withholdings because a combined calculation is accurate. This simple but accurate completion of the W-4 prevents them from underpaying due to having 2 incomes and ensures their credits are reflected in their withholding. Mistakes happen when people rush through this form or assume nothing needs to change. If you start a side business, get married, have a child, or even get a significant raise, your withholding should be updated right away. Otherwise, the IRS may charge underpayment penalties if you owe too much at the end of the year. Likewise, overpaying means you have less money in each paycheck, which could have been used to pay bills, invest, or save for emergencies. Filling out the W-4 accurately is not about getting a big refund. It's about keeping your money in your pocket throughout the year while avoiding a surprise bill. The IRS goal is for your withholding to match your tax liability as closely as possible. If you follow these steps and review your form annually, or whenever your life changes, you can achieve that balance in just a few minutes. And that was all from us today for this video, folks. For more similar content, make sure to watch our other video on how you can build your emergency fund in 100 days.